Hey everybody, Economic Ninja here. I hope you're doing great. It's a nice hot day in California, but I thought I'd take a break from outside real quick, come in here and go over a story because, hey, CPI numbers came out today, inflation numbers, and I think they're a crock of crap, to be honest with you. And I only say that crock of crap because I have no better term for it with keeping it clean. Because, hey, come on, this is a family economic show. The kids, everyone should be able to sit down for this. So let's go ahead and share the screen. I'm going to go over this story out of the hedge. We're going to link it below, but it's right here entitled U.S. Consumer Prices, or sorry, U.S. Consumer Price Inflation slows. Man, it's hot. Ninja needs some water. He's had too much coffee today. Price inflation slows in July. Real wages continue to tumble. And that is really the story because I don't know if you guys have remembered, about 3 months ago, I said that I believe there's going to be a reprieve in the summer, that we are going to see markets rally. And I was warning that it's going to be a dead cat bounce. And what we really need to be looking at is looking into the fall season. Okay. Historically, times of severe turmoil in markets, economic markets, have always mostly happened in the fall. Okay. And it is a very serious time, especially because of seasonality adjustments, things like that. But also just it's just a really interesting time of the year. And that's what I really want people to look at, right? So today we saw these inflation numbers wane a little bit, and I do not believe this is the end of the story. I think there's a lot more to it. So let's dive into this, and then I'll give you some thoughts. It says, while economists expected another modest rise in inflation on a month-to-month basis, the headline U.S. consumer price inflation was expected to slow from 9.1% year over year to 8.7% year over year in July, but it actually slowed significantly more than expected to 8.5% year over year, ending its 16-month streak of month-over-month gains. So right now you're seeing things rally, right? Like the stock market, bond market, things like that. But also, if you look, gold's rallying, and we'll dive into that in a second. So obviously we've been on a tear when it comes to CPI numbers, right? From 2020, when it bottomed, when everything shut down, till now, we've seen, just this meteoric rise. But if you look, this is what I want you to see too. Look at this dip right here that happened in 2021. It was about the same time of year that we are seeing this dip. Now, we've had two dips so far this year, but again, still on an upward trajectory. But I want to make sure people understand that right here, okay? Because this is a seasonality issue. All right. If you notice, back in 2018, we peaked and started to drop in the same time of the year. And so this is normal, what I believe. And as we move into the fall season and Christmas season, we're going to see higher prices. Okay, so let's dive in a little bit deeper. It says core CPI, however, was expected to reaccelerate, which was to rise from 0.59%, or sorry, 5.9% year over year to 6.1% year over year in July. But instead, it too continued to decelerate to 5.9% year over year. Again, I want to remind you, in 2021, we saw a deceleration in July, all right? We're seeing a lot of deceleration. As a matter of fact, YouTube videos, I want to point this out real quick. This time of the year is normally a slow time of the year for people to be watching YouTube videos and being on social media. Why? Because they're out so busy, because it's the middle of summer. They're out getting their family vacations in. They're not thinking about a lot of stuff. You've probably heard the term sell in May, go away. That actually has to do with all kinds of human, not emotions, but traits, let me think here, habits, things like that. Most people are completely checked out when it comes to the middle of summer. This is the dead heat of summer. They've gotten to the place, in life where they're out spending some money, they're out doing things and enjoying life, which is great. Okay. But so there's a lot more at play here. Okay. I don't want people to just all of a sudden think that we're out of it, which I believe we're not out of it. Now, service inflation continued to rise, but energy and goods price growth slowed. Now, energy and goods price growth slowed. Now think about this. Energy, what are we talking about? Cost of energy, gasoline, electricity, things like that, right? People have started to slow their spending on that. We've seen that when we talk about RV sales. looking at places that actually house RVs or camping sites, people are actually driving less, right? So they're using less. So when demand comes down, prices come down with it, right? We've also seen that in the price of oil. A barrel of oil, I think, hit $88, $86 a couple of weeks ago, or maybe a week ago. So it's because demand was waning, right? And we had a couple of reports where inventories had picked up, all right? But again, I do not think that is end of it. So now it says, as energy prices tumbled month over month, driven by plunging gasoline prices, like I just said, and it gives you a breakdown. I want you guys to take a look at that when you can. It said, but shelter costs continue to rise, 0.5% month over month. Now, that isn't a lot, but it still is rising. Rents and payments on homes are still going up, all right? That is getting worse and worse. So that will continue to add downward pressure on the real estate market. So I want people to understand that as well. It says the rent index rose 0.7% in July, and the owner's equivalent rent index rose 0.6%, all right? The index for lodging away from home continued to decline, falling 2.7% in July after a 2.7% decrease in June. Now, again, that is lined up with what I was telling you in the early spring, that as we saw subscription services start to fall, we are going to see travel and leisure start to fall. So that is happening perfectly, okay? Next was auto sales. That is already starting to fall. The car that I want to buy, we used to be $20,000 over MSRP. We are now priced at MSRP for the car that I want to buy, that I'm waiting for. So we're starting to see deflation in certain segments of the economy. Just like I said in January, March, I did a video that deflation doesn't happen all at once. Father Time doesn't come in, wake up, go, all right, just go from inflation, hit the deflation button, and everything crashes. All right, it happens in segments. So it's happening exactly like we've been watching. So I'm super stoked on that. Remember, guys, the last one to fall is housing, okay? And it's already started, but to really see it in full effect nationwide, we have a couple more things that need to happen, all right? Now, right here, again, it says this was partially offset by a modest drop in car prices. We have seen car prices drop, like I said. We're now not seeing those $10,000, $20,000 price tags over MSRP. We're now getting back down into MSRP range. And I'm going to do this little side note. For any car company that still hasn't figured out where you're at right now with sales, and you're trying to hold on to inventory because you're thin on inventory and you're not moving those units, you need to wake up, because what's going to happen is you're going to be known as the bad car company, because I'm pretty sure Kia, it's a car company I like, they're still holding on to those prices over MSRP. And I have a feeling you're going to lose a lot of loyal customers as other car companies start to back their prices down to try and move units. Now it says, finally, and perhaps most importantly, real average weekly earnings continue to plunge, now down 16 straight months as inflation eats away at any wage gains. We're going to stop here, and I want you guys to read this story, okay, because there's some great info in this. So, okay, this is the most important thing I want you guys to understand. Real wage growth. You could have right now inflation actually just flatline or even fall a little bit. But if wages are falling at a greater pace, it is just as bad as wages staying steady or going up a little bit, but inflation rising higher, okay? So that's something I want people to understand. That is not the story that's being put out at the MSN. They want you to think that everything's really rosy, everything's great. We're going to actually pop back in here because I wanted to show you, this is how you can prove it. What's going on in the... See, you can see my Google searches too. How much did the elite make? How much? I was checking out some moo stuff. All right, so here we go. CNBC, check this out. Right here, gold. This is what's gold's. Okay, gold's up nominally right now, but it did spike pretty solid. Silver's up 1%. As a matter of fact, commodities across the board are all up. Now, think about this. Would that be up? Why would that be up on a day where inflation, the headline saying it's slowing down? Right? See, the facts are investors know exactly what's going on here. They're trying to make you think, just like the government came out and said, hey, we're just going to change the definition of recession. There are a lot of people that are a lot smarter than Joe Biden. Matter of fact, that he actually equals 99.9% of the population. I'm not joking here. Because when you think you can just lie to the public and say, well, we're just going to change the definition, right? So anything you knew before then is totally false. We're going to change the definition. There are a lot of smarter people out there that go, oh, okay, we understand what's going on. You're messing with these numbers and you're trying to spin this rosy spin. But since wages are falling, it doesn't matter that we're flatlining right now on inflation. All right. That means it's still we're in a recession right now. I want to make that clear. We are in a recession right now, regardless of what the new terms means. And it's going to get worse because wages are falling. Okay. Now, look at today where we're sitting at. Hold on. Sorry. Up. The daily spike actually was a little bit more impressive, a little bit more pronounced today when it came out. When the news came out. And the reason why is because algorithms always trade really aggressively in the beginning. But then you can see it right here. We topped out around what, 18, and then it came back off of its highs. But see, the facts are investors know what's going on. The true story here is that inflation is still getting worse. All right. On the longer trend target this next year, year and a half, inflation can continue to get worse. Why? How do you know that's true, Ninja? It's because the Federal Reserve is not raising their rates fast enough and aggressive enough to get on top of real inflation, okay? And all the government's doing is lying to you by changing definitions or changing where the ball's getting thrown from this time and who's going to catch it this time and who's going to announce. Because the fact is, if they can keep you confused, then they can keep you doing what you normally do. Go to work, earn a paycheck, spend money into the real economy by debt, right? Getting into deeper debt, watching advertisements and doing all that stuff. But then also your money and your pensions are going up to buy up all these stocks, all these homes. And that's what I think is really a tragedy, quite frankly. Guys, how do you deal with this? Well, you get out of debt, you don't get into any more frivolous debt, and you get cash stored on the side, and then you look at inflation hedges like gold and silver, right? Gold, since 2020, January 2020, has performed, I believe still it's better performing on a percentage basis than the stock markets. All right. There's a reason for that because all this money is being created. And look at House and Senate are working on stuff right now to try and print just yet another $700 billion. And they're going to try and convince you it's to get you out of inflation. Well, just like Greg Manarino said the other day, well, if $700 billion will get us out of inflation, well, why not print $5 trillion? Because honestly, at a certain point, everybody has that aha moment. You guys are having it right now. That's why you're watching it. And quite frankly, you're still here. And I thank you. And do me a favor, hashtag inflation, hashtag Biden inflation, hashtag anything about inflation you want in the comment section. So I know you made it this far because I know you guys are the group that are absolutely going to crush it. You know there's something wrong. You know you're being lied to. And instead of being a victim, you're going to take advantage of it. All right, guys, that being said, I'm going to link the video down below. Thank you so much to everybody who's watching. The Economic Ninja is out.